Hey, I'm Vishal Krishna, the founder and editor of the upstreamlife.com. I like talking about the way the banking institutions in this country, in India, are transforming with technology, AI, machine learning. We're going to talk about this today with Scienaptic AI's leader. I've got Mr. Joydip with me. How are you, Joydip?
Very good, thank you.
You know, I'm super stoked that you're here because, like I said, I'm keen to understand how banking institutions are using technology rapidly and scaling up, because India, I think, is the fastest growing lending market. Tell me, what are we going to discuss in this podcast, just to keep them glued into the screen?
Yeah, look, so I know there's a diverse audience out there. Some of you may know about banking and lending, some of you may not. Obviously, I'm very passionate about lending and banking and kind of the future of India.
Correct.
So definitely we should talk a little bit about that. I think at least it'll be educational for most folks.
Yes.
I think we should also talk more broadly about the lending landscape and what are the drivers. Why is India going to grow and what do lenders really look for in a solution? But I also don't want it to be very boring and very technical and very jargonistic. So happy to answer any questions at the end around leadership, skill sets, etc.
Absolutely. I want to know more about leadership and your style, because you moved from the CPG background and electronics background into running banking and finance, right? And technology. That's going to be an interesting transition that we're going to talk about.
Before that, I was in consulting, so I never really did
anything. Absolutely. So if you're a chief risk officer in a bank, you will enjoy this conversation. Yes. If you're going through digital transformation, Scienaptic AI is the company to talk to. So thank you, Joy. Let's go into the podcast.
Wonderful being here. Thanks for having me.
Joy, thank you for coming to the studio. I've told you that I've always been interested in this rule engines for banking, and business rule engines, more to say. And I also had invested in a startup similar to this space. And I'm so happy that Scienaptic has come here, and Scienaptic can talk about what it's done with NBFCs and banking. But let's explain to the audience what Scienaptic is all about, because it's a very scientific name.
Right.
But it's got to do everything with banking. So what is it?
So great question. I think let me explain the name,
please,
because my clients ask, why is it such a difficult name, right? So it's actually a play of two words, right? Synaptic, which is the neural system which connects the brain to the rest of the body, but it's spelled as SYNAP.
Yes.
And so we replace that first part with science, sign from science. So it's got little technology in it, and it's got AI or neurons in it. And that's what our company is.
Okay, it's great. Thank you for correcting me. I was calling it Scienaptic, but you played on the word calling it Scienaptic, which is amazing, which is actually nice. Yeah. So how old is the idea?
It's about 10 years old.
Okay.
Now. Yeah.
Okay.
It started in the US, although I think the leadership team has a lot of Indian influence.
Flavor to it, yeah.
Flavor to it. Our primary market is the US, followed by India. And I think we have a few. We are about 4 or 5 other countries as well in and around.
Play around, yeah.
Southeast Asia.
India is growing.
Great. Yeah, absolutely.
India, you would agree that we both are probably on the other side of the 40s.
That's right.
But the last 10 years has seen such impact in India in terms of consumption, in terms of lending, right? So that's where Scienaptic plays a major role with the banks and NBFCs. So what is the technology all about?
So if you think about, so I know some of the audience may not be very, very intimately familiar with fintech technology.
Yes.
So I'll kind of explain.
Please take your time and explain. I'd love to hear, yes.
So when you go to a bank and you apply for a credit card or a loan or a business loan or a personal loan or auto loan, right? Now, obviously, the bank has to assess the risk, right? So they have to say, okay, how much does Vishal earn? What are his expenses? How much can I give him? The more they give you, the more interest they generate, right? So they're sort of, their income goes up at the moment they lend you more. But beyond a point, the risk of returning the money goes high. So the value goes down. So they have to identify the peak, right? How much can I lend you, and at what terms? If I extend the loan for too little, then your EMIs go up and you may not be able to afford it. But if I extend it for too long, then who knows what's going to happen to your income, your salary, etc. 5-10 years from now. So what's the sweet spot? So what's the tenure? What's the amount? What's the interest rate? So if you're a slightly higher risk business or individual, you may be having a challenge getting loans from other banks, right? Hopefully you and I can get loans from ICICI, HDFC, etc. But not everybody in India is that fortunate, although they are very wealthy, right? But the income is not documented. So
that's an interesting point.
Yeah, we'll get
talk
to that.
About that. Yes.
But I think there you can charge a slightly higher rate of interest and still have the person take a loan from you. So basically, this technology is about quickly figuring out exactly what's the optimal amount I can lend somebody and at what terms. And in order to do that, you need technology, you need smart intelligence, we call it AI these days, or machine learning. You need different kinds of data, because most people who are not salaried, how do you gauge their income, right? So there we have this concept of alternative data that is becoming a huge thing in India these days. So our solution basically combines all of that, and within a second or two, it gives the most accurate read on a person's risk, and therefore comes up with, given the product that you're trying to lend to this person, what should be the parameters of
It's customized almost.
It is absolutely for everybody.
Okay. Yeah. To come to this hypothesis that you just mentioned, I need to start with a history in terms of how do you build these algorithms. I'll tell you why. 10 years ago, all of us owned credit cards. It was a cookie cutter approach, saying, okay, there's certain income patterns, and let's just give it to this person, and let's see. I mean, I had a baseline back then of saying 10 lakhs. Now it's obviously increased. It's very interesting. Now that I'm a businessman, the measurements on me is different compared to when I was an employee. We'll get to that also. Yeah. How did these rule engines emerge from, say, just a people problem where a bunch of people would say, take patterns, put everything together, triage it together, then say, okay, here is a block that applies to everybody, versus how it's now gone to smart intelligence. That's a keyword you've used, and therefore machine learning AI.
Right.
How did it get there? How many people, our banks, when I say people, these institutions, how many of them are on that journey? That's really fascinating for me, really, to know.
So I'll come to the second question in a bit. So really, if you think about what does it take to take an unknown entity, let's say Vishal, and within a second have a very accurate read on how much can Vishal repay, because it's all about how much you can repay. I can give you tons of money and you love it, right? So to get that in a second or two, you can broadly break the solution or the problem set into three different pieces, okay? The first is the data. Where do I get good, fact-based, quantifiable, dependable data on somebody? If you're salaried, I can get it from your salary slips. If you're banking, if you have a good dense banking history, I can get it from my bank statements. I can get it from the credit bureaus. What if it's a small kirana shop owner, right, who's never borrowed money from the formal channel? He's taken it from the Saukars, informal guys. He doesn't have a salary. He probably doesn't pay GST. What's the data set, right? So the first is the data. The second is, okay, now you've got tons of data. The algorithms, right? The machine learning, the analytics is the second part. How do you actually build something so you can quickly make intelligence out of it, right? And the third thing is the technology platform that puts it all together, because you have to do it in an automated way, but you have to do it right every time and not have to have hundreds of individuals do it, right? So Scienaptic has been lucky. We offer all of these, but I think in general, you need all three of them to provide an answer very quickly, because these days people, when they're asking for, let's say, a BNPL loan or a small ticket loan, if you take a day to tell them of your decision, Bajaj will give it to them in 5 minutes, right? So you have to out-Bajaj. Wow. So you need to be automated. If you take hundreds of people or underwriters to do a lot of manual work, it's not feasible, because if the loan is 50,000 rupees, you as an NBFC are making a small amount of that, and your cost of funds, if you take it out, it's not feasible to actually have any manual work going in. So it has to be automated, but at the same time, it has to be accurate, and it has to be based on data.
Okay. I want to go back in history again a little further. In 2006, when I was at ABP, we ran a story on the rise of the Indian SME. And we talked to a lot of banks. I mean, obviously, we are talking about base technology, right? We had just gone core banking, Finicles of the world were there, ICICI, of course, and all those other banks. And this is Bombay. And when we did that cover story at ABP, they said that all small businesses are now treated as retail loans. I mean, they'll treat you like an individual. Circa now, it says that I'm moving forward 15, 16 years, 18 years, actually, time flies. And now people people call me as a business and they say, you've qualified for a loan, 25 lakhs, 30 lakhs. These are still individual loans. They know that I have a business, but they say, we will put it on your name. How do they triage that this person deserves this kind of a loan? Is there, because, and these are big banks doing it. And I'm coming to the opportunity in the market segment you go to, but like you said, somebody has to outbeat a Bajaj in, say, 5 minutes, right, in offering. Every time a person has called me, the loan rates are different, sometimes cheaper, sometimes higher in terms of interest, but the value is just going up. I don't know why. How do they get this information about me? There's alternative data. Again, now going to the data source. Alternative data versus income.
Correct.
How do they measure you?
So I think a lot has happened in the last decade from where you were 10, 12 years ago to now, right? Back in those days, you had CIBIL or a credit bureau, and there was only one bureau. Now there are 4. And then you had salary slips or bank statements. You had to download it and give it to somebody, and the guy used to read it and do all that stuff, right? Things have changed now dramatically, and I think the government in India is trying to push digital lending through a lot of ways, right? But essentially, 2 things have happened which have dramatically, increased the number of opportunities that small businesses such as yourself are getting, right? One is the alternative data, right? Today, if you are a GST filer, the government has a GST portal where I can hit an API, and of course with OTP validations,
and these are open to startups.
These are all open to everybody, right? So I can I hit the GST database through an API from my system, and give it a GST IN and whatever password, and then it sends you an OTP.
Yes.
And you get an OTP. You put the OTP in, and I can get last 2-3 years of your GST filing, including
whether
the GST
on time
credit.
or not on time.
Right. And how much did you file, and how much credits did you get? So I can actually get the top line and the bottom line quasi.
Wow, that's interesting.
Right?
So they triage this.
This is that, right? Because if I wait for your financial statements, a lot of companies, their financial statements can't really be trusted if they are small, MSME.
Yes.
And it's a year late, right? So what have you done? So you might be very good last year, but there's a reason you might need cash this year because you've not done so well. GST is more real time, right? It's like last month, up until last month. So you have GST, you have your traditional financial statements. The MCA portal actually makes it easy for us to download and get that financial statement. Bank statement. Gone are the days when you have to upload a PDF or download a PDF and then send a printout. Here, now you have something called an account aggregator, where with just one consent, the system shows you all the accounts you have, and you can say, okay, take this account, this is my salary account, and this is the other account. And through an API, I get all your transaction data. And then there are other things also, right?
This is phenomenal.
For the smaller businesses, there's this Udyam portal, and then there are crime portals, fraud portals, etc. So this is the data set. In fact, it is now too much data, and now therefore you need some algorithms to sort it, organize it, and make some sense. There's where Scienaptic comes in. So we also have the data pools. I mean, we don't originate the GST, or we are not a bureau, but we have our partnerships. But then now the problem is now you get lots of data. How do you triangulate, right? Because so this answers your question on why are everybody giving you different interest rates and different terms. Because not everybody uses all the data, and not everybody synthesizes that data in the same way. Right? So depending on what I look at, what weightage I give, what models I have built, I might have a slightly different read of you. But regardless, I'm not as blind as I used to be 12 years ago on you.
So it's more real.
It's more real, and it's more real time as well.
Okay. Just a quick thought on your thought process. I mean, I keep reading the press, and they say that India is over-leveraged, but I look at it as an opportunity where every country grows with amount being lent to its population, right? That's how US also grew.
Right.
But with using these kind of products such as Scienaptic, and I'm going to talk about the product and services in a bit, is that what's going to reduce the debt incidence or being overburdened with debt the capital efficiency of banks, protecting them and not being over-leveraged. You know what I'm saying? That's the journey, isn't it? Because I want to know how many of those banks in India or NBFCs are on that journey saying, yes, we understand that, okay, if you're lending to Vishal or Joy, this is the tenure, this is the peaks, they can understand and not over-lend to them, because over-leverage could be a problem for them and for customers also, right?
So it's a journey.
Is that a fair question to ask?
It is. And every month you'll see something that the RBI is doing to make sure that Big Brother is watching,
Yes.
and before things
Correct.
go in a wrong way, they're trying
Correct.
to preempt some of that
Yes.
stuff. So is there a danger of getting over-leveraged? Absolutely, right? But is the right way to step back and do nothing about it? I don't think so, right? This is a growth economy. This is, India is growing, and people need money to do something with it, and hopefully good things will happen out of that. I think there is a balance we need to tread. If I look at the spectrum of lenders, right, you have these traditional banks like SBI, Punjab National Bank, et cetera,
nationalized
the
ones.
nationalized
Yes.
banks. They are very, very risk averse. So they're at one end of the spectrum.
Still on the social side, small farmers, rural.
Correct. And not over lending, I would think, right? And then you have these large private banks, HDFC, ICICI, they have a lot of systems in place, they have liquidity, et cetera, et cetera. Then you're getting to the NBFCs and the smaller NBFCs, like the digital lenders and digital NBFCs, where they borrow money from these banks and they lend. Now, one would hope that before they lend, they know how to collect and they're putting the right risk measures. But sometimes in their zeal, particularly the fintechs.
Yes.
So we work with a lot of NBFCs and primarily work with the NBFCs and fintechs because a value proposition of a company like Scienaptic is to measure risk. NBFCs and the fintechs obviously lend to riskier people than ICICI, who lends to salaried people, etc. So we know that there are some fintechs and NBFCs that have a growth mindset and will worry about collections, not worry about it later, but they have less of a thing. But then there are some who hire a chief risk officer on day zero and say, let's put the risk lens right. So there are degrees of, in the spectrum, there are degrees of variance, but there are people on this side of the spectrum that need to be watched.
Okay, that's a good thing. That's a great answer. So in terms of you also talked about your customers. So let's talk customers. NBFCs, what's the sweet spot? Because there's many NBFCs in India now.
Yeah.
And then you also talked about fintechs. Would banks also use your product? I'm curious about the smaller banks. And then you could also talk about co-ops because that's an elephant in the room. I mean, it's so huge, but very difficult market to crack. So you can take each of these stakeholders. And then I also want to talk about the consumption bracket on how Indians are consuming in a sense. Let's say the Kirana stores, and why are they the customers today for banks? Why do they have to be funded in a big way?
Okay.
And how do banks triage them? Is something I want to go into detail. But let's start with your
the customer, the customer base, right? So if you think about the lenders in India, right? Large banks is one set.
Yes.
Right. Within that, maybe the PSUs versus the private banks. You can because their requirements are different.
Canada
the speed are different. The Canada banks on one side, and then the private banks, right? The Kotak, the ICICI. Then you have the smaller banks, like the small finance, the tier 2, tier 3, and the small finance banks. Then you have the NBFCs. Within NBFCs, there are NBFCs who lend to SMEs largely and corporates. Then there are NBFCs who lend to consumers, right? And then there are fintechs who are kind of either sourcing to the NBFCs or they have their own business. Like everybody's lending, right? Amazon is lending to its merchants. Zomato is lending to its merchants. And
everybody's got a license now, NBFC license, and they lend. Or they partner with somebody and then lend. Yes, correct.
So
absolutely.
If you are lending from your own book, you need a license. But if you're sourcing and giving leads to that person, you need a different kind of, you still need to be part of the regulatory landscape, but you don't need a lending license.
Got it.
You need a fintech license, let's say, right? Now, where does Scienaptic's sweet spot lie? To be very honest, right? People who take more risk in their lending are more attractive. For them, a company like Scienaptic is most attractive, right? So for the PSUs, we are less attractive because they have their own set ways and processes. They're okay with semi-manual processes. When you get to the private banks, they're more agile. They want to try out different things. But even the large private banks, they have, HDFC has had these problems, right? Machine learning, automation, scale, even 6, 7, 10 years ago before we were really big. So they have some processes in place. To uproot those processes and put Scienaptic in, it takes a while, right? I'm not saying we're not going to go there. Now you come to the smaller scale NBFCs and banks, the small finance banks. They're more interested. They're saying, okay, if my big brother has done this, what are they doing? can we get more affordable solutions to what they have and get it quickly, right? Can somebody come in, agile, nimble startup who has demonstrated capabilities? Then you get to the NBFCs who are now starting to take higher risks and higher interest rates. So to them, if they can save 1% of losses, that can make the difference perhaps between a profitable and an unprofitable NBFC or fintech and the fintech. So the mid-sized to slightly higher-sized NBFCs and fintechs lending to consumers and small businesses as opposed to corporates, because here a machine can do a lot of things, but if you're giving a 3 crore loan to a
hire
corporate,
more as an NBFC,
correct.
yes.
And you can't hire if you're giving a 1 lakh rupee loan. It's just, if you spend more than an hour on a person, you're just looking at losses.
That's an interesting data point.
Right.
It's all time to market.
Time to market, yeah. And the cost of underwriting,
Wow.
right? And then the more unsecured the loan is, the better, the higher the value proposition of Scienaptic. Because if you have gold, or if you have a house that's worth 1 crore and you're lending against it, and something happens, the person is not able to pay, you can take the gold, keep it, right?
Yeah.
But if it's an unsecured loan, like maybe even a two-wheeler loan or a personal loan or a consumer durable loan, so I'll buy a cell phone from the store and I get a loan from somebody, and tomorrow sending somebody to my house to recover that 10,000 rupees actually costs more than the 10,000 rupees, right? So this is the sweet spot for us. We're really growing, I think, over the last... In India, we really started growing after COVID because people suddenly saw that the dynamics were changing. They wanted more sophisticated algorithms. And I think we've got about 40, 50 clients in India now.
Okay.
Now, good you mentioned about the cooperatives. We have a large business in the US, actually, larger than India. There, our sweet spot is the credit unions. And you've been that side of the world. So that's similar to cooperatives because they have a closed member group.
But much more organized.
Of course, yeah. And there, they need all of this. They're able to obviously pay much more than our cooperatives in India. And they don't have the sophistication in-house like a Citibank would have. So we've found a sweet spot. We've got close to 100 credit union clients over there. In India, it's different. So in India, this is the sweet spot I was talking about.
Do you see them grow at all, the co-ops, in terms of becoming a business for you?
Yes, absolutely. I think two things have to happen if we have to become big with co-ops and co-ops have to become big with us. A, their adoption in technology has to go up 3-4 notches, right? For all the right reasons. They were serving a local need and they didn't need to spend a lot on technology, right? I feel that they still look at some of these sophisticated technologies as a cost rather than as an investment, right?
I mean, that's a great segue into the pricing. I mean, it's all customized pricing for everybody, right? With the nuances and features that they want.
Right.
It's SaaS, right? In a way, it's a software service, or it's also in a way, it can also be in-house also if
it's both, right? Yeah. So particularly with
it's a license, you call it a license.
Legal licenses. Some in the financial services and lending industry that's so regulated, some banks will never let data get out of there.
So it's more license than
So it's a license, right? Yes. But then there are some fintechs and some of the mid-size or the smaller size NBFCs who don't have a large IT in-house. They'll say, you manage it, you show me the reports every month.
That's it.
If RBI audits me, you need to get audited, and all that stuff. So we do that regularly. We get audited and all that because
so the co-ops can't afford it. That's what you're saying. You're coming to, or is it, or do they? What is the general pricing like? I mean, if you look at what's a risk officer in a co-op ready to pay for this?
So I think so our pricing model, like I was saying, it's whether it's license or SaaS, it's based on volumes.
Correct.
Right? And unit price.
Number of loans underwritten.
Yes. Or number of loans rejected, because our system also has to be intelligent in rejecting people. So the number of loans
Got it. It's
sourced.
Clever. That's true. I didn't even thought about that. Yes.
Yeah, because if we're rejecting a
risky
cost
too,
I'm saving a lot of money to the bank, right? In fact, more than. But anyway, I think it's a value-based model. So typically our cost. Our structure is an annual license that buys you these many applications.
Okay.
Right? If you go beyond that, then you pay per app.
Yes.
Right? So there's a minimum kind of, you have to buy these many credits for the year. You can use those at any time in the year if you're going up and down. That sort of. And now, more or less, that's the model, whether it's in-house, whether I deploy this on their infra, or I keep it on our infra and do it as a SaaS model, depending on what they.
So they may sign up in the future, not just with you, but they can look at these models.
I think the thing with co-ops is their volumes are much smaller.
Uh-huh.
And so it's volume and also unit price. If you're giving a 10,000 rupee loan to a farmer, you can't afford to pay somebody like a Scienaptic 10% of that. But if you are giving 100x the volumes, then it kind of makes up for it, right? I'm taking a small penny from you, but 100x is a lot of money. Or if you're giving not a 10,000 rupee, but a 10 lakh rupee or a 5 lakh rupee loan. So either the ticket sizes have to go up or the volume has to go up. So one of the interesting models that we were thinking of once is, instead of going to each co-op one by one, can we go to a co-op, community
cluster
of community
approach,
banks,
cluster
approach, right? And go to one of their, they have these clubs and super houses, right? And say that, okay, I'll treat you as one client, and I'll do SaaS. You pay for pay per use, but collectively then it becomes feasible.
I'm really looking forward to it.
And that could disrupt that side of the
ecosystem.
House.
Joy, you've given me so much knowledge about how the industry works. I want to get into nitty-gritties of the impact, the benefit. Business rule engine is such a big term,
Right.
And
Right.
I often get confused as to where do they deploy these things. There's core banking again. And beyond that, like you said, the tenure and the peak they have to figure out, and that's where you come in. And I want to know, how do these NBFCs benefit? How can you break down the BRE into many things, many components, and then we could talk about, without mentioning the names of your customers, perhaps talk about the impact that you made.
Absolutely. Yeah. So let me answer the first question first,
please.
right? So if you have a BRE, it is quite a, horizontally
Big thing, yes.
big thing, right? So what are BREs expected to do these days, right? One is they should have all the API connectivities for the alternative data and the traditional data. So the data ingestion happens like that,
Okay.
right? I mean, you'll have to follow the OTP protocols, whatever it is. So ingestion has to happen frictionlessly. Somebody shouldn't log into some portal and download something and put it in Excel. That should happen. The second thing that BRE should do is it should have some rules, models, etc., that then take this data and make sense out of it, right? These days, what's happening is the business team is saying that my business changes daily, right? Today, I realize there's flood somewhere. I look at a dashboard and I see something else. I want to change some parameters right away. So I don't want to stand in line in front of IT. So there has to be a UI component, and it should be very nimble and flexible for non-coders to go in and say, okay, the state of Chennai, the state of Tamil Nadu has a flood. I'll change that.
Well, why not?
Yeah. And so it has a nice front-end UI, which is very business-friendly. It has a sophisticated backend with models, etc. It has the data ingestion component. And then they want a lot of analytics in it. So gone are the days when you set some rules and strategy, and then you're just watching it every month.
Yeah.
Today, what they want to do, the chief risk officer and the risk team, is they say, okay, I need to get higher approvals, okay? I want to do some simulations. I want to see if I change this and this and that, and I want to have 5 hypotheses. I want to build it on the fly on the screen. I have historical data. I want to pass it, and I want to see how each one of these simulations, how do they end up, in what approval rate, what dealing. So these things have to be available at blazing speed through the BRE to the business users. And of course, there's an unwritten rule that whatever data passes through the BRE, you should have some mechanism where the models are self-learning. So machine learning is the machine learns from the latest data. So sort of as to complete the loop. So these are some of the components. Of course, there's security, scalability, any
That's a given you got to do.
Yeah, you got to do, right?
Yeah.
So that's the components. Now coming to your question on the impact. See, I would say, just to simplify this, there are three things that BREs are supposed to deliver as impact. And we do this and we measure this with every client, right? One is, am I helping you grow, right? So am I increasing your approval rate, right? So by doing a few things, using machine learning smartly, everybody has to grow faster with the balancing metrics of portfolio quality. So am I growing and am I losing more? So it's like a trade-off, right? I can lend to everybody. My risk is be through the roof.
So approval to rejection ratio.
Approval, exactly right. Okay. So approval ratio. And then we call it the default percentage, right? The bad loans or the books, the bad books, right? So if you think about a a 2x2. I used to be a consultant in my former life, right? So I like these 2x2s. So if the y-axis is how fast are you growing, and the x-axis is how much money are you losing out of every 100 rupees that you gave, what percentage is lost. You want to be, what we do is if you're here, I want to move you up and I want to move you to the left. So we measure that impact.
The simple moves that can make a lot of money.
Correct. So that's sort of the two levers. You grow fast, you lose less. Faster, you lose less. Or you approve more and you lose less. And the third dimension is the automation. We call it turnaround time. From a customer is the turnaround time.
Correct.
For the business, it's also how much of manpower can I save and automate most of it. There's a term called straight-through processing. Can I use the Scienaptic system, and can the system be so intelligent that it immediately says, out of every 100 customers, these 10-15% just decline them straight through. They are just clearly high risk. And these 20-30% just approve them. It's a question of how much interest and how much amount, but it'll give me an optimal amount. So all of a sudden, 40% of your customers, you don't have to lift a finger and the decision is done. Now you have to only work on the gray area, and it's not black and white, but the gray area in the middle. And then what we do iteratively through machine learning is reduce that gray area. So you get most automation, but at the same time, don't compromise on your growth and risk.
This is interesting. Now I want to talk to you more about the risk officer set up the war room.
Right.
How has that evolved? And because Scienaptic has now come change things, right? With the way you mentioned it, the gray area has now become an area that they understand and they can take risks on. How is that changing? Say, Sharkan, now to 4 years or 3 years from now, when India would really grow. When I look at a funding organizer like a bank, right? It's usually a guy who comes and sells it to a guy, or a lady comes and says, "Okay, can you take this loan?" Right? I'm only see the front end,
right?
But behind there's somebody evaluating you, right. And I'm sure they'd put teams to the problem.
Right.
I like a statement saying with technology they don't need to have larger teams like the big companies solving it, right. But you can be clever, intuitive, and the gray areas are covered with your technology. So how does a typical risk officer's team look like?
Right.
And how does it empower the underwriter? That's the thought process.
Yeah. So if you think about the risk team in a bank, right, and think about the different, let's call it the different processes.
Yes,
we call it use cases because we help in solving those problems. The first thing, before even somebody comes for a loan and they underwrite, that's the core underwriting process. But even before there's a pre-approval process. So if you're a bank, can I actually look at your current account transactions or your savings account transactions and pre-approve you? Because I kind of know, if I'm your principal banker, I kind of know the business, the ebbs and flows, and et cetera, how much EMI you can pay. I know that before Diwali, you as a Kirana store actually are short of cash, but I know that every year during Diwali, you make a ton of cash. So can I create a product which is a 3-month product, kind of inventory financing product, as they call it, based on inventory
for the business?
Because gone are the days when a bank will call thousands of people, sir, loan chahiye, and 99% of them will say,
that should still happen.
It still happens. But you don't need to do that, right? You can analyze the data and say, okay, I'm going to go to this customer, and there's a 90% chance that person will say, wow, I really wanted it. I was about to call 5 people. You came to me. What's the best you can do, right? And if you do that for the best of your customers, you save them from attriting to someone
basically
else.
They already have the database. So why take the risk of just calling random?
Right. So banks have this advantage because they have your checking account or a savings account. But even NBFCs today, you can partner with people, right? You can partner with a POS terminal guy and you know the POS data of the customer, right? You can partner with the Khata books and you can get the P&L balance sheet of all these small kiranas, and you can. So a lot of these partnerships are working out. So there's a pre-approval process, coming back to your question, right? So you approve somebody, and then they, you look at people who are low risk but also have the high propensity to buy, and you go after them. And then there is the core underwriting. If somebody says, yes, I want a loan, they are willing to divulge a little bit more information. They're allowing you to take a bureau, et cetera, et cetera. So then you have the core underwriting process. Now, after that, you have either rejected them or disbursed a loan to them. Then there is an early warning signal. So on your existing portfolio, let's say it's a three-year loan. Things can go good or bad, right, for all of your people. So let's say you have a portfolio of 1 lakh accounts. Every month, there are some clients who we help them kind of it's like a crystal ball that says the person is okay now, they're paying on time, but there are some signals that say the risk is building up and pressure is building up. So they may not be able to pay on time in the next 2 months. Once they have already defaulted, it's in going to the collections bucket. It's sometimes already too late. So can you preempt that and go restructure their loans or figure out where to place your EMI so that it's before the other EMI. So he's just got his salary and then you're the first one. So you can do a lot of smart interventions. So this is called an early warning signal where every month we are getting more data and then we are telling the bank what's going to happen. Who are the red, amber, green, who are the red customers that you should focus on and maybe correct them and take some corrective actions, right? And then there are kind of cross-sell, upsell, right? So there are NBFCs.
Yeah, it's gone beyond a relationship now. Now you're saying, okay, we know in the holiday season how much you sell. So with the existing customers, it's more
scary, isn't it?
It's good.
There are some of these apps.
Yeah.
The scary part is they know so much about me through my emails, etc. That's where the RBI is clamping down and saying,
why not? That regulation's there, right?
Yeah.
Privacy. But in terms of business, this is super cool.
Huge.
Whereas, I might not have a good relationship with the bank because I don't know the manager.
Right.
In the old days, I had to go sit with the manager and convince, right? That with data now, you don't have to do that.
Right.
The manager must be empowered, right, by region.
Yeah.
I want to ask you two things. Does this apply even to smaller town? We're talking about the stakeholders in terms of the risk officer now says, okay, let's go beyond Bangalore. Let's go to a Kolar. Let's go to a Tumkur, for example. Or let's go to a Bhiwandi, for example. How does that, now they are more empowered to fund businesses there, right? With this, is this data available there?
So I think that's the challenge, right? So the availability of data on a farmer in Tumkur, who, like I said, was not salaried, who hasn't taken a lot of loans. Maybe they've taken one official loan from an MFI and a microfinance institution.
Nabard or something like that,
They don't have bank statements. They have a passbook, but et cetera, right? And you can't measure the proceeds of his farm or whatever it is very easily, right?
Yes.
He may be very wealthy and he may be able to repay the loan much better than me, but I have documented evidence, so the bank is more surety that, okay, I'll pay you this much. So there, he could be worth a 50,000 rupee loan or a 50 lakh rupee loan. You don't know, so you're not going to give him anything. So that's where the blind spot is. That's getting fixed as we speak, but I think that's the hurdle. After that, once the data is there, then machine learning is able to pick up and all these BRE systems are in place. So what we are doing, Scienaptic as a company is doing these days, is going into or working with clients and helping them get into the tier 3 plus. We work with some of the top MFI NBFCs, right? So, some of this is public information on our website. So Credit Access Grameen, IIFL Samasta.
These are clients.
These are Muthoot Microfinance.
Big clients, actually.
Yeah, 5 of the top 10.
And you still think they're mid-sized, right? They're larger.
They're mid-sized compared to the banks.
Yes.
But in the MFI space, these are the top 5, 6, right? But what they are doing is really, at a personal level, really energizes me, right? So they're going after the poor women who hardly make a living, right?
Especially Grameen, the Credit Access Grameen does that very well,
They are supporting their small kids. They want to put them through an English medium school, right? Sometimes the husbands are working, sometimes they are not.
Yeah, you're reading my mind because I met a farmer recently outside of Mysore and I was surprised that he was sending his daughter to a school that charged 1.5 lakhs, and he was looking out for a loan.
Right.
It was interesting because I knew him, so he was saying, can you give me some sort of an income statement saying that I've been employed by you? He's much more wealthier, but because he doesn't have anything documented, it was rejected. So he says, can you show me something that I've been your employee doing something? But it's interesting they are having these conversations, but which whatever bank they went to there couldn't understand that they're worth that. It's interesting. How do we solve this? Is that something that has to be done? Is it lucrative?
It is. It is very lucrative. Making dream comes true is partly about lucrativeness, partly about taking Bharat to the next level, right? But yes, it is lucrative. So look at these people, right? If 80% or 60% of India is in rural India,
which is true,
and even if you say 10% of them
get into this bracket,
are worthy enough to repay the loans,
it's huge for the GDP.
Look at that. Look at the numbers, right? How many zeros are there? It's more than tier 1 and 2 cities put together into 5 into 10, right?
Yes.
So things are getting disrupted. The government is trying to come up with centralized data portals where people can submit the data and then it's available to users, right? So there's a FIP and FIU, financial institution provider and financial institution user who are using this to lend. The provider part of the ecosystem is getting built. The users then can tap into it and give loans like that.
The changing nature of banking in this country is phenomenal, right? Perhaps the best in the world at the moment, highly regulated. But it is growing some. What are your thoughts on this? I think we're far ahead digitally in terms of the US.
Yes.
Right? You'd agree. And far more inclusive of, nothing against the US, by the way things are going, but the way the inclusiveness is increasing here, right, with digital access?
Yeah. I think regulation-wise, the mature markets are way more regulated because they have had the time and they've had these systems in place for a long time. I wouldn't say Asia is as regulated and they're somewhat deregulated. I mean, there is ups and downs, right? Varying levels of regulation. But you have to, but because it's growing, new avenues are coming up, right? And new things are getting discovered, new barriers have to be broken. There is always a catch-up on regulation, right? That has to happen. If you too tightly regulate everything, then innovation stops, right? And we're at a cusp where, I've been at a cusp. Look at UPI, right? No other country has UPI. We are now exporting UPI to the other countries and seeing. So some of those innovations have come. There's a concept called ULI. United Lending Interface or Unified Lending Interface.
We're doing that?
Yes. So government has come up with that account aggregator where all your bank statements, investments will come. Now that's getting expanded to companies as well. And then there are other things, right? Insurance will come in there. GST will come in there. Financial statements. So imagine if all of this for the tier 3 plus kind of the fragmented or unstructured segments of the market are also in there.
It's interesting you say this because, again, going back to rural Mysore and those regions in Coorg, the smaller villages, they use UPI. The businesses use UPI. Nobody insists on cash anymore.
Correct.
Very few. I think, the COVID changed everything, yes. Right. They appreciate this and they're already sharing their data. So they are potential future customers, aren't they?
Already, right? So
already?
If you are using UPI, you have to have a bank account.
Yeah.
Earlier, the issue was these people don't have dense bank accounts. They do cash transactions.
Yes.
So bank accounts hai, but in a month there are 2 transactions. Now each one of these micro transactions hit your bank account. So if I get the SBI ledger for you, now I almost know the ticket size, the volume, the seasonality and all that. So for a company like us, that's like salivating, right? And like, okay, I can do so much more about this using machine learning.
How will that segment of the population, I'm glad you said, even a 10% addition of the numbers, say from the rural side or the rural businesses coming in is phenomenal. Right. What is the tipping point for this? Will that move fast or will there still be risk covers? Because all lending is either consumption or expansion in terms of business. Right? So how do you see that happen?
I think it's already moving, right? I mean, in fact, if you look at the last 4 or 5 years of high union budget, ministers are talking about the MSME segment, right? They're not talking about us, right? Yeah. We're already taken care of, right? Correct. So I think people are really putting a lot of effort. I think most of the consumption, most of this lending is now going to building the business, so expansion of their businesses, right? Which then, you lend X, and with that you grow by 2X, you hire 2 more people, and then they are salaried, and then they take loans. It's just like a upward spiral, right? There's a little bit of consumption there as well, because as affluence goes up, you can also save and consume. So this is growing. I think it's just huge, right? Over the next every 5 years, we are making an improvement of what we did in the last 20 years. Then the next 5 years is like, so it's like a curve that's exponential. The balancing fact though is the regulation, right? Stupid things. Out of 100 people, one person will do something stupid and then it tarnishes the whole system, right? Correct. And a lot of good people have to suffer because of that. I'm talking about companies, fintechs, etc. I think that's also happening.
But that's important in a system that's growing, right? Absolutely. US wouldn't have been what it is with all that. Exactly. If you looked at the Great Depression and the amount of, the mania that they had there in terms of investments. Right. I think you learn, you regulate yourself. Correct.
It's just that I think India has to do that much faster than the luxury that the other countries had.
Obviously, great points. I want to talk about, risk officers again and how they look at AI I'm glad you said machine learning, and in this entire conversation you've not said AI. I'm very happy for that, because we're still there, we're still getting there. What is their view on this level of automation that empowers, one person, if this data empowers the bank representative in a village, for example, or 10 villages, it's so much more powerful in closing a loan early or rejecting something early. Right? Do they appreciate it, or do they still think that, okay, we still like the old way of doing business where people are important? And I say people, not just hiring, but also fact that, hey, I know this person, I might as well lend, we'll see what happens.
So I think that's a good question, right? I'll twist the question before answering it, right? Of course, the lending officers are thinking about business impact, right? They know that AI can make more accurate decisions through an nth degree polynomial versus what a human being can look at an Excel and do, right? Some of them are still cautiously optimistic or sometimes even scared of AI. I'll be very blunt, right? Why? Because AI is a little bit of a black box, right? You feed in data, and there is a model which cannot be put as an expression that a mathematician can understand, and an answer comes out. And unfortunately, lending is a lag business. So you can lend as much, and you're trusting the model. After 2 years, you realize there are a lot of issues in the loans that I made 2 years ago. It's too late, right? You've given the money out. So, right? So, and regulators and auditors are also like saying, okay, this is great, but how do you know this is actually right? So that's the dilemma that the risk officers are in. So, for example, for very large ticket loans, they seldom use AI because they still know that if I'm giving a 1 crore loan, the person will wait for a week, and I can afford to put an individual there, and I can pay his salary to work on 5 of these loans in a month, right? But when you get to these small ticket loans, and everybody's lending fast, then you're kind of caught in the middle. So do I use AI, etc.? So they are...
You better use it, right?
Yeah.
As an opinion.
Correct. So what they're doing is they are using AI, but they're also making it explainable. So one of the things, for example, Scienaptic has launched recently is explainable AI.
It's an audit.
It's auditable AI, right? So I can actually say that while this is a black box, you can peel the layers of the onion at any point in time and see what's happening. So that kind of tries to combine the goods of both. You get the benefit of AI, but at the same time...
Is it a generative kind of a piece?
It is. So generative is more in the textual kind of
query-based, prompt-based for you guys.
Yeah. It is a little bit different. It doesn't generate more things. It's more of it explains what's happening internally. Yeah. Okay. I think we'll probably have to do another session for this.
It's interesting, isn't it?
Yeah.
So but it is getting there.
It is getting there.
And it's changing things, it's shaking up things.
Yeah.
But they have to embrace it.
Correct. In fact, the RBI has recently come up with some guidelines saying that to give certain kinds of loans higher and higher, you can't run policies. You have to have a scorecard, which is a more sophisticated version of just rules. So if I run through rules, it's binary, right? I get knocked off here, but I might be really good in some of the other parameters to offset my negativeness here, right? So a scorecard kind of balances that by putting weights. Yeah, it takes it.
That's implemented in big banks already.
Yeah.
Wow, that's an opportunity for you to plug into. Okay, I want to talk about your team. The team in India. I know you're a global business, but how's India panning out for you, and how's your team? How is you mentioned sweet spots of NBFCs and obviously fintechs. What's going to happen? I mean, in terms of the tech itself, its license or SaaS. What are customers looking for? Is it for you region-wise? Is it Bombay, Delhi still? Or would you see new markets emerging for you?
So our team is...
Because there are old lending institutions in Tamil Nadu, in Andhra Pradesh, that want to probably... I'm not talking co-ops. These are institutions also.
Yeah.
Do you see that as an opportunity?
So yeah, I think if you're talking about teams, the sales team or the client-facing teams are regional.
Okay.
And we are trying to grow that team and make them, north, west, south, etc. I think the back-end team, by virtue of our ML and tech,
very strong.
that can be centralized. Yes. In fact, we have teams in India that is helping out other countries as well.
Right? Bangalore-based?
Bangalore-based. Yeah.
Okay.
So that's about the team. I think in terms of markets segments, right? So like any company, when we started off, we had to prove ourselves, right? So initially, the first 2-3 months, years, we actually targeted the smaller NBFCs, right? Now we have enough logos, enough clients who have been using us for a number of years. Now we are going after the mid-sized to the larger sized NBFCs, the small banks. We have some of them as our clients. So I think that's sort of and some of them, most of them are nationwide, right? So we don't have to be really region. Of course, they're in Mumbai. Of course, they're in Delhi and Gurgaon or in Bangalore, some in Chennai, Hyderabad. So yeah, I think but the team is centralized. Right?
Would you say that as a company in the software space or the AI space, you're growing with India, the way India grows, you're also growing. It's just that you need people to adopt the digital technology a lot more. I know everything on the customer-facing side is completely digital. I know core banking is digital.
Right.
The nuanced customization, which is going to be hyper, that's something that's going to grow, I'm sure.
That's going to grow. I think we are growing faster than the lending market in India is growing. and not only us, our competitors also, right? And that's because it's not just the number of loans that are being given and the consumption. It's also about people saying, now I have to do everything that I did more digitally. Now I have to do everything that I did more accurately because my competitors are differentiating between high, medium, and low risk customers better. If I go with a blunt weapon, I'm going to end up getting a lot of duds, right, in terms of loans, right? And I'm going to have to write them off. So I have to do that. So it's like India is growing this way, but the requirement of doing things faster, more automated, and more sharper is going this way. So we're able to kind of hopefully ride that wave, and we're seeing some of that.
No, I really wish you all the best, and I'm sure, I'm glad you said competition as well. India is such a big market. Do you see it? Do you see that? We have the 10 trillion dream or 5 trillion, 10 trillion dream in terms of GDP.
Yeah.
Is that a reality so that your companies like you would have probably looked at some data to say that, okay, India will grow like that. Are we heading there?
Early signs are absolutely in that direction.
Good,
right?
good.
Yeah, very good. I think, for us, we are a drop of the 5 trillion, right? For us, even if we double, quadruple, go 10 times in 3-4 years, we are still going to be a drop. So that's the good news, I guess, for us, right? So we can still take a sweet spot in the 5 trillion. Of course, if that doubles to 10 trillion,
it's nothing
there's
like
a natural expansion that will happen to us more than they are.
No, I wish you all the best. But I have a personal question on leadership. How do you, you've been running this for a while. How do you unwind? What are you inspired by? Because this is an era of information. There's a lot of it. But we also come from a time when there was nothing.
Right.
Right. So what did you get inspired by to go from your journey of, consulting to becoming a startup person and obviously running a larger company now, right? To that evolution, how did you prepare yourself from, it happens naturally, of course, but do you have anything, books, movies or pieces of art that inspired you to do what you do?
Yeah. So it's interesting. It's networking with a lot of friends who were doing similar things, but with WhatsApp and earlier it was Facebook. Now I think those are for older generation. That's my
for
kid
the
says.
people in the 40s now. Yeah.
So I don't do much of Instagram, but I think there's enough of social network and books. So look, I started off being a consultant. I did a lot of consulting in my early days, right? I guess now if I look back, hindsight is always 20/20, right? I think one of the things that they teach you, right? So I was, let's say, with McKinsey in the US for a while, right? Every 3 months you go to a different project.
New client.
New industry. And then they say, oh, he's the expert in financial services, he's expert in manufacturing, and I'm a 25-year-old guy or 30-year-old guy, and I'm an expert.
So you got to learn something completely new. So you're disrupted.
I'm disrupted. And the health is disrupted. Travel is all screwed up. But I think what that teaches you go through this machine and you don't realize you pick up the art of learning quickly and knowing when to not speak. Some of those things, right? And
it's also interesting. In business, you have to be quiet,
and also listen, right? I think that's very, very underestimated, the power of listening. So you're a kid and you're with your partner and with some senior CXOs who have been running this business for 20 years. And after 3 months, you have to tell them something that they didn't already know.
So these are guys super superior in terms of wit, knowledge. Yeah. You're now telling them this is how you got to do something.
So obviously you get a lot of help from your firm, right, and network. And then, but it's about structured problem solving, quick art of learning, going up the learning curve. So that came a little bit early on in my career.
You're
It was
blessed to
very
get that.
frustrating at that time, but now if I look back on it, I think it built certain things that now come naturally to me. So switching gears during, in midlife, right? I'm not afraid of it anymore, right? So I wasn't in financial services in a big way 6 years ago.
You
right?
told
I was
me
in
earlier, CPG,
electronics,
retail.
CPG, and all
Yes.
that, right? And I was doing marketing.
Yeah.
I wasn't doing sales in India. Now I probably know
come
the
naturally.
200 CROs in India.
So the basic foundations are the same. It's a problem. How do you approach, break it into pieces?
Yeah. So I think, so if I have to say, if you're a 30, 40-year-old, right, and I'm clearly way past that.
Both
if you
of us
look
are,
at me,
yeah.
I would say, what are the things that if I knew back then, maybe I could have made smarter decisions, but whatever, learn through failures, et cetera, et cetera. One is invest in career planning. Right? A lot of people jump for a quick 5%, 10%, 20%
hike.
job in hike and increase. But think, and they say, develop your career plan and all that. A lot of that is,
Jargon,
BS and all that jargon, right? But it makes, so I'll tell you a quick thing. So when I did a lot of consulting, and I watched a lot of people. So you said what inspired me? I read books, Jack Welch books, and books in
Jack
leadership.
Welch is amazing.
There was a 5-6 year period where I used to read a lot of books, and I say, what do they have that I don't have? So they said, okay, you don't have people management skill. You can move very fast. You can solve a problem yourself. But how about taking 5,000 people? That's so team management, people management. Secondly, they said sales and marketing, right? If you want to be a big P&L leader, you need to sell. You can't just be operational or just tell other people how to do things. You have to actually have a real job.
Walk the talk.
Right. So I did that. So
Was it hard?
Very hard, right? So first I got into this people management role, like 1,000 people reporting to me. And then I realized this is just changing diapers every day. And it's a very operational. And I said, no, I can't do
How
that.
did you stay straight? I mean, in the sense, not letting yourself down. How did you stay straight focused? Let's not let things let the noise not derail me. How did you stay focused?
I think that's probably one thing. I'm a very planned person,
You got to
right?
plan.
And I look at every few weeks. I look at a few metrics and say, I started off doing this for this year or this decade. Am I going in that path or not? You have to build that discipline, right? Otherwise, you'll have fun in life. You may actually have more fun than I did, and by all means, you should do that. But I think if you have to get from point A to point B and you have to navigate through, you have to kind of keep doing this career planning and building that. So I managed a P&L. For that, I had to go to Singapore. I spent 6-7 years there. I'd blast over there. I managed the APAC P&L for
Moved
Dell.
back here.
Then I said, okay, now what do I want to do? Midlife crisis again. I said,
Constant disruption is good.
Correct.
If you're organized, you'll overcome it. Yeah.
Correct. And you have to keep pushing yourself. And I'm not saying that's the only right thing to do. You can retire at 40. That's fine. And people take vacations and spend all their money that they've earned. That's great. But if you want to actually get to a certain dream and you're struggling to get there, I think just craft out a career path. See what are the gaps that you're missing in terms of skill sets. Try to fill them up. Whether you get there or not, you'll be far better off in the direction that you want to be.
No, it's a fantastic point, and I'm glad you said Jack Welch. It's a name that none of them have recommended in a long time. The basics still remain. I mean, it's great to read those books because it's about running an organization. It's about managing teams because it tests you.
Yeah.
It's about selling, which is another hard thing to do.
And it's about having a vision,
Yes.
which is not status quo, which is 3-4x degrees disruptive. And then just having the perseverance to kind of go there, and it'll never work out for you. So you have to figure out the workarounds and slowly get closer.
Joydip, this has been a pleasure. All the best to Scienaptic and your team. Thank you.
Yeah.
Thank you.
Nice being here.